pleasure to be your host for the next 40 minutes or so. I have two important guests joining me today, the IMF's two top leaders, Managing Director Kristalina Georgieva and First Deputy Managing Director Gita Gopinath. This is the first time two women are holding the top two positions at the IMF and appearing together. All of that's coming right up. FP Live discussions are where we bring experts and insiders to discuss world affairs. Unlike cable TV, there are no ad breaks. We get to dive deep into the issues. Typically, these conversations are for subscribers only, but because of the importance of this conversation, we've decided to stream it live on both FP and the IMF's social platforms, so we are now reaching an audience of millions. As always with FP Live events, we'll save a little bit of time at the end for questions from our global audience. So for those of you who have registered on Zoom ahead of time, click on the Q&A button, write in. Don't forget to tell us your name and which country you're in, and I'll try and bring you into the conversation. So, on to the discussion today. It is Tuesday, March 22nd. Russia's invasion of Ukraine began almost 1 month ago now. We're going to focus today on the global economic ripple effects from the ongoing war. The West has imposed historic sanctions on Moscow. Crude and commodity prices have surged around the world, and all of this makes a fragile recovery from the coronavirus pandemic that much harder. The question then is what the world can do to safeguard vulnerable communities and countries, how to raise money for that effort, and how to do all of that in a way that doesn't derail efforts to reduce carbon emissions. These are historic challenges, and I want to introduce now my two guests to discuss them. Kristalina Georgieva is the Managing Director of the International Monetary Fund. Before joining the IMF, she was CEO of the World Bank. Georgieva is the first person from an emerging market economy to hold the top office at the IMF. Also with us today is Gita Gopinath, the IMF's first Deputy Managing Director. She previously served as the Chief Economist of the IMF. Welcome, Kristalina and Gita. It's a real pleasure to have you here with us today.
Great to be with you, Ravi. Thank you for the invitation.
Thank you, Ravi.
Great to have you on. We're making history here, as we said earlier. Kristalina, I thought I'd begin, obviously, with the situation in Ukraine and the global economic ripple effects from that. But before that even, I know you have family in Ukraine. Are they okay? Just a quick update there.
Thank you for asking. I just talked to my family in Kharkiv. They are still safe. Their area has not been bombed, but they hear bombing virtually every day, multiple times. They were affected by losing water supply. And you imagine you are in a multi-floor building and there is no water. That makes it very, very hard. What I want to say to those who are listening is that the hardships of war are so unnecessary and so terrible, affecting people for reasons that is hard for them to understand. Why is this happening? But the spirit of the Ukrainian people is incredible. In my family, it is the women that are keeping very strong. And the message I get from them is, we are going to win this war. We will persevere.
That is so good to hear, Kristalina, and I'm so glad your family is safe for now. Let me ask you then a question putting on your IMF hat. How is the IMF assisting Ukraine at this moment, and what more can the world do?
Well, let me say that the devastation on the Ukrainian economy breaks my heart. We are likely to see shrinkage that could be a third of what it was before the war. Imagine how that translates into hardship on people. So what we did was to immediately respond to a request from Ukraine for emergency financing, $1.4 billion. It is to keep the country functioning. It is to make sure that There is support for the most vulnerable people, that there is administration securing what I just talked about, water and electricity, even in the war-affected areas. We are also very closely engaged with Ukraine on how to apply best crisis management measures so the economy does not collapse. And I would say that the money is important, but that support on how to retain the functioning of the financial system is equally important. And my team tells me that they have constant engagements with their Ukrainian counterparts. Sometimes they talk and they hear the sirens announcing yet another air raid. So the authorities in Ukraine are doing a remarkable job under the conditions of war. We are there for them on a longer term path. Of course, we all pray for the war to end, and then there would be a massive reconstruction effort necessary. Of course, the IMF would do its part.
And let's hope that can happen soon enough. Gita, let's bring you in. So Russia was able to make its last debt payment, I think, last week, but Moscow still owes something like $490 billion to foreign entities. What happens if it can't make good on them?
So, Ravi, as you mentioned, Russia has been current so far on its debt payments. It does have the dollars that are needed. It's earning those to be able to make those payments. Now, we are still in the fog of war, and there is uncertainty around the regulations and the ability to make the payment go through. So there are risks associated with this, which is what we're seeing in terms of pricing of Russian debt on the market. In terms of what the impact would be if there were a default, I think the direct effect on the rest of the world would be quite limited because the numbers that we're looking at are relatively small from a global perspective. It is not a systemic risk to the global economy. However, you can, of course, have some banks that have greater exposure to these particular assets that could be negatively impacted. And of course, from Russia's perspective, it will have consequences for its long-term, when you've defaulted, re-entry into the market is not that easy, and that can take a long time.
And one would imagine that the sanctions could continue for even longer, of course, after this particular war ends. Kristalina, talk us through the global economic impacts from Russia's invasion. So obviously, crude prices have soared. Even more worrying is the fact that Ukraine and Russia are major suppliers of wheat, barley, even fertilizer, all of which will just have immense impacts on the developing world. What aspects of this right now are worrying you the most?
Well, let me start from the fact that Russia invaded Ukraine when the world economy was yet to fully recover from the COVID-induced crisis. What we were striving for is for growth to go up, and the inflation that has become a problem to go down. Instead, we have the exact opposite. Growth is going down, inflation is going up. And we are assessing the impact of the war and the sanctions in different parts of the world and different categories of countries. So let me briefly walk you through. First are the immediate neighbors of Russia and Ukraine that have relatively weak economies. The Caucasus, some of the Central Asian republics, Moldova, they rely on trade and remittances, especially with Russia. This is now brought to a swift stop. These countries are very impacted. Second are the countries that are receiving refugees. We now are at 3.3 million in neighboring countries. They're putting a demand on these economies that if the war continues for a long time is going to be quite profound. Third are the countries that depend on imports of energy and food from Russia and Ukraine. energy primarily, of course, from Russia, food from both Russia and Ukraine. And it is devastating for those that have high level of dependency. To put it very simply, a war in Ukraine means hunger in Africa. So when we look at these lines of dependency, what we are doing is looking at best policy action that can be taken in different circumstances. And let me frame two. One, it was important before, more important today, focus on the most vulnerable people. Those for whom higher energy and higher food prices mean devastation. We encourage countries to direct the little policy space they have to those that are most vulnerable. And second, look at ways in which you can anticipate further developments in policies, especially central bank monetary policy, and then try to stay ahead of the curve. What does it mean? If a country has high level of dollar-denominated debt, please check your currency mismatches. Think about possibly reprofiling your debt early. Don't wait until there is a shock directly hitting you. You wouldn't be surprised. Many of our members are now more intensely engaged with the fund. And I can state clearly, we have the financial capacity to support them. We have about 3/4 of our 1 trillion lending capacity available. And two, we are intensely concentrated on the specific policy recommendations we need to give to countries that, as I said, are faced with different impacts from this crisis.
So Gita, let's try and just delve into this a little bit deeper. If you think of the countries, just to take food, for example, the countries that were importing much of their wheat from Ukraine. So say Lebanon, for example, got 50% of its wheat from there. Countries like Bangladesh also relied on Ukraine a fair bit. How worried are you about food inflation? And also, what can the IMF do to sort of help supply chains get reoriented?
I think the issue of food insecurity was always quite salient before this crisis, but it's become even more salient. Russia and Ukraine together account for about 30% of world's exports of wheat. It's around 15% for corn. And we may not have seen the full effect yet, because we know, for instance, for wheat, what matters is the harvest that's coming around this summer. And with disruptions to that harvest in the summer, we could see even bigger effects in terms of food reaching different parts of the world. So food prices have gone up. In many parts of the world, that just means lower real incomes because they have less money to spend on other things. But in other parts of the world, like Kristalina mentioned, in parts of Africa, in the Middle East, in Asia, as you mentioned, we're talking also about real hunger. We're talking about deprivation, food insecurity, the social tensions that come along with it. So this is a major concern, and the longer this war lasts, the more grievous the problems become. In terms of what the IMF can do, as you know, we stand ready to help our members who are dealing with balance of payments needs, and that includes their ability to get imports of food and other essential needs that they have to meet. So we are there for their essential balance of payments needs, and we can help. In terms of just the supply chain and where to get foods from, I mean, that's not our comparative advantage, but we work very closely with all the other partners of the international multilateral system to help countries address their needs as best possible.
Yeah, I can imagine. I want to broaden this out a little bit more, and gradually I'm going to bring in some of our viewer questions. If you're listening in again, you can click on the Q&A button and submit a question. We have a few already that I will bring in. But just to switch topics a little bit, and then I know we'll come back to the global economy. Kristalina, since we last spoke, you've kind of come under fire over allegations of mishandling the World Bank's doing business rankings while you were CEO there. And specifically, the allegation was that the rankings favored China. The IMF since found that those allegations couldn't be substantiated. But I did want to ask you, given your current role, does the controversy hang over you in any way? Are there any lessons to be learned from this, both for the World Bank and the IMF?
Well, the IMF board heard both sides of the story and expressed full confidence in my role as a managing director. What I can tell you is that the IMF is very strong on data and analysis. Why? Because it constantly reviews and improves the quality of data and the quality of analysis. So for us, that was an issue of a particular report of the World Bank, not of the IMF. But hey, we always take advantage of an opportunity to do better. So we have brought a very prominent person, the former president of Bundesbank, Jens Weidmann, to lead an external panel to help us see what more we can do. And that work is ongoing. And I'm very fortunate to have one of the world's experts on data and analysis, Gita, as first deputy managing director. So my take is that the fund is strong and will get only stronger.
Well, that's good to hear. Let's bring in Gita on this as well. Look, it is Women's History Month. And as I was saying earlier, it's particularly great that the top 2 economists at the IMF are women. And I want to use that as a segue to discuss the broader post-pandemic recovery, because it's so clear that the pandemic hit women especially hard around the world. And now, of course, we have these other extra shocks on top of that through Russia and Ukraine. So, Gita, if you can just talk us a little bit through that in terms of the impact specifically on women, and then what we can do about that.
So, Ravi, indeed, when we were at the peak of the pandemic, so if you go back to 2020, when there were countries that were going into lockdowns, we saw pretty uniformly across the world women being much harder hit than men. And that's because they tended to work in fields that were more affected by lockdowns. So areas like hospitality, women tend to be more employed in those sectors. They were more directly hit. What we also saw is that as schools closed down, again, women were hit through that channel because they remain the main caregivers. Also, if somebody fell sick at home, they were the ones who were doing the caregiving. So they were much more affected during the peak of this pandemic. And then we saw, as recoveries took place in many parts of the world, we have seen women come back into the labor market. We've seen that particularly strongly, for instance, for the advanced economy group as a whole. There are differences within that group, but for the advanced economy group as a whole, you no longer see women being hit harder than men. But again, like I said, there's a lot of variation. In the US, it's still the case that women's labor force participation has not returned as quickly as men has. But if you look at emerging market and developing economies, you certainly see the much bigger and slow hit to women and the slower recovery in terms of women coming back into the labor market for women in these parts of the world. What we do know when we look at our 190 member countries and look at their experiences, it's quite clear that policy matters. How you deal with the pandemic and the kind of support you provide matters. So specifically, what would those be? So firstly, if you are able to keep your schools open as best possible, you do have the benefit then of women being able to return into the workforce much more quickly. If you're able to help small enterprises, those who are self-employed, that also keeps women engaged in economic activity because women also tend to be much more in these specific areas. When you provide income support to the vulnerable, because women have tended to be the vulnerable, it has helped them. So policies do make a difference, and you're able to bring women back into the labor force through the right policy actions.
Kristalina, you've mentioned that the fund will likely look to downgrade the global economic outlook. Are you able to tell us how far and more broadly, what are the larger repercussions of slowing growth this year?
We will have our growth projections presented in mid-April, and at that point we will be able to report on how we assess the impact of this war on the global economy in more details. Our expectation is that what we had in the beginning of the year, which was a small downgrade of growth projections for 2022 by half a percentage point to 4.4%, is going to go down further, but would still remain in positive territory. Some economies that have been fast to recover from COVID are in a stronger position to face the impact of this shock, and there the likelihood of more positive growth is higher. I mean, the United States has fairly strong fundamentals, but those that were not yet coming out of the COVID crisis, that were falling further behind, they're going to be hit even harder. And that is where I find it particularly concerning that we are going to see possibly risk of recession in these countries where shock comes on top of weak economy. The issue that is very concerning, of course, is the impact on inflation. It was hot before this crisis. It got hotter. And what does it mean? Of course, it means that there would be impact on real incomes of people, and that may have implications for demand. But it also means that central banks are going to be asked to step up their actions. And we are already seeing Chair Powell announcing that is coming, and rightly so. But for many emerging markets, tightening of financial conditions is going to be a big shock. And what I want to say today is that they have policy measures to respond. Use them early. I'm particularly worried of low-income countries in debt distress. Remember, Ravi, 2015, we were concerned that nearly 30% of low-income countries were in debt distress. And we are now in a situation in which that percentage doubled. Now we have 60% near or in debt distress. Wow. Just imagine what is the impact for them of a slowing global economy and accelerating inflation, with policy actions taken, rightly so, to tackle inflation, but having suffocating impact on them.
That's very worrying indeed. I'm going to bring in some of our viewer questions now. And Gita, I'm going to put this one to you first. It is from one of Foreign Policy's columnists, Adam Tooze. I know you're both familiar with his work. He writes in to say that the IMF was extremely vocal and clear-sighted in calling for a concerted global vaccine response to COVID. Adam specifically cites the two of you as being at the forefront of this effort, making clear that there was a huge payoff to vaccinate the world. I remember the data when it came out as well. And yet your appeals went largely unanswered. And so the moral judgment on this is obvious. The world failed. But the question is, and I ask you to now think of this question of the failure to vaccinate the world as economists, they're essentially $1 trillion notes just lying on the sidewalk. So Gita, what's your take on that missed opportunity, what it does for the economy, and also what it does for trust in the global economic system?
Well, say hi to Adam. On what was needed from the global community to address the health crisis, I believe they fell short. I think without a doubt, they fell short. Progress was made, so I can also put this in terms of a glass half full, which is that efforts were made. There was clearly pledges of vaccine donations. There was part financing of the ACT Accelerator. There were part donations to COVAX, but not on the scale and not with the speed with which it was needed last year. Now we are in a situation where there is enough supply that has come through, and countries are receiving sufficient supplies, including low-income countries, but there is now an absorption capacity issue and also a vaccine hesitancy issue. But given, again, how clear the economic benefits were to moving quickly, it is disappointing that not enough was done quickly enough. And it's not too late to do the right thing because the pandemic is not over. If you just look at the chart of global cases on COVID over the last 2 weeks, they've been going up as cases have gone up in Europe and in Asia. So we still have the opportunity to do this right. It concerns me that when you look at budgets, the governments are thinking less about supporting the rest of the world. I think a mistake governments make is to assume that they are providing developing aid to countries to help an individual country in this crisis. This is not about development aid. This is about preventing a global systemic crisis, which has consequences for everyone's economies. So the budgets have to be more generous and much more needs to be done. It's quite clear that COVID-19 is now here for the long term. We could have a mild endemic scenario, that's one possibility. But from everything we hear from experts, there are very serious risks of much more serious downsides. So it's important for us to get the job done now.
Kristalina, I want to bring you on a very similar point. So, as we were saying, the guidance was clear. The economic ramifications were clear from both of you. And yet the world didn't rise to the occasion, which is not great. What does that mean then? And this was on an issue that was very clear cut. I remember the data, it was very clear cut. What does this then mean for issues that are maybe not so clear cut, where the world needs to collaborate? So, I know that, you're an environmental economist by training. So, for example, what about the global push to achieve net zero carbon emissions? How do you then sort of incentivize the world to cooperate on that when they couldn't on something that was far more clear cut?
It is a very pressing question for all of us because a climate catastrophe is virtually putting at risk our existence. And avoiding it is in everybody's interest. When you look at the pandemic, we called for 50 billion to turn it into benefits of trillions. It is exactly the same when we talk about climate. The advanced economies promised 100 billion a year starting 2020, and we are yet to see the 100 billion a year materializing. They need to go to the developing world to help the developing world cope with emission reduction and adaptation to climate risks. What was encouraging and remains encouraging in my mind is that the private sector finance has finally gotten that message. It was incredible to see in Glasgow the presence of finance ministers, central bankers, and private sector financial institutions on a scale I have never seen in a climate meeting. So my view is that institutions like the IMF and others, we have tremendous responsibility to make the economic case for climate action and be very forceful in demonstrating the benefits of this action for everybody. We have been doing that. We came up with a very simple, straightforward framework for how the world can unite on climate, which is one, send a clear price signal that emissions have to go down. In other words, carbon price. As economists, we know that when you have the right incentive, consumers and producers change their behavior. We even put the quantitative line. We said, today it is about $3 to $4 a ton. By 2030, it has to be $75 a ton. Everywhere we need to get gradually in that direction. Two, we said public investments need to powerfully inject emission reduction, climate resilience, and use it on a scale that really transforms pathways, but mostly to remove barriers to private investors to step forward. And number three, data for financial institutions. Make disclosure of climate-related financial stability risks visible to those who make investment decisions. We are working on all these fronts. And actually, I should add one more point, Ravi, that is probably in this environment of high energy prices even more important. Compensate the losers. Make it a just transition. Recognize that some gain, but some lose from it. And a fair society within countries, across countries, can, at a very low cost, inject this transformational moment. I worry not so much that this year we will see some increase in emissions because of reliance to coal, to whatever energy source is available. I worry much more that this year we seem to be taking our eyes from the ball, the pandemic ball. Nobody talks about, as if COVID disappeared, the climate ball. We cannot afford it. So my main message to the audience is we have to learn to deal with more than one crisis at one time because we live in a more shock-prone world. And we, the fund, we have a tremendous role to keep our 190 members able to talk with each other and reach consensus on these big, big challenges the world faces.
That's so important, Kristalina. Gita, let me bring you in back for a couple of questions from our audience. Both are on sanctions. I'm going to put them both to you at the same time, but you can take them together. One is from Sajid Padar, an FP subscriber, who asks if you think the sanctions and freezing of Russian assets will result in an urge for an alternate currency to the US dollar, and what kinds of disruptions that will have on global trade and the economy. And as you mull that one, Carol High asks a related question about how successful and impactful the IMF views economic sanctions to begin with, given that historically Iran and North Korea have been sanctioned, but those situations were still unresolved. Gita.
So these are important questions coming up, given the events we are living through. I think it's fair to say that events of the kind that we've had, in fact, this year and over the past year, has important implications for the global economic order. To the question of, very quickly, if you asked me today about does this imply the imminent demise of the dollar, I would say flat out no. But that is not the case. But what we are seeing around the world is increasing fragmentation of payment systems that probably will further increase following this war. We are certainly seeing changes to global trade. For a fact, we know that energy trade will never look the same again after this war. And we are likely to see some countries, reconsidering how much they hold of certain currencies in their reserves. So fragmentation is indeed an important concern. And we know that typically, and I've worked on this issue of what generates a dominant currency, is usually currencies have complementary roles. They have a role in a payment for payments. They have a role as a store of value. And if we find that there are parts of the world that are moving on to making trade payments in another currency, not the dollar, for instance, or they start starting to save in other forms of currency assets, then we could see pockets where we might see shifts happening. Now, the longer this war continues, and depending upon how it rolls out, and I'm just hoping that this ends as soon as possible, but we could see much more larger effects. In terms of the effect of the economic sanctions, now I think it was well justified. The economic sanctions that were imposed are following Russia's invasion of Ukraine. What we are seeing in terms of the effect on Russia's financial markets, on the ruble, they are quite dramatic, and they will be very large, the effect. We will have an actual assessment in terms of the economic consequences when we put out the World Economic Outlook in April. But these are, these will have very serious economic consequences for Russia.
Gita, I just want to add to that a very related question from Alexander Kravitz. Are you concerned, or is the IMF concerned, that cryptocurrencies could be used by Russia to evade sanctions?
We've certainly seen an increase in the use of cryptocurrencies before this war, and we've seen it happen more in emerging markets than in others. I think parts of the world where there's less financial inclusion, where people have less access to more regular forms of credit, cryptocurrency and other related forms of digital currencies can start playing a very important role. We don't really have a clear picture at this time of how much this particular war has triggered an increase in the use of cryptocurrencies. It's not an easy picture to put together, but we are tracking this very closely. And I think in terms of the implications for the global economic order, I think it's fair to say that the recent events will accelerate consideration of central bank digital currencies more widely around the world. And we need to be particularly careful of the regulation that's needed to ensure that the new forms of digital money don't lead to evasion of capital flow restrictions, especially for emerging and developing economies. So I think we need to have a lot more work done on the regulatory front on crypto and digital money.
And actually, our board of directors, just months before the war started, approved an expansion of our work on digital money overall, because even without the war, it is very clear that the pandemic accelerated digitalization overall, and the application of digital money is on steroids. I just want to give you one anecdote. We surveyed our membership on interest in CBDCs, in central bank digital currencies, and to our greatest surprise, more than 100 of our members are at some point of investigating the applicability of CBDCs, piloting CBDCs, and of course some already having them in place. So when we look at this fast-moving development, we can break it in three buckets. One is central bank digital currencies. There, the most difficult question is interoperability. As Gita said, we see fragmentation in payment systems. Will CBDCs, based on different technologies, fragment it even more? And there we see a role for BIS, for the Bank for International Settlement, for us at the IMF, to build tunnels that connect these different CBDCs to make that fragmentation less damaging for the world economy, or even minimize it. The second bucket are the private digital monies, stable coins, that are backed by assets. In other words, they're more stable. And there the issue is regulation. If they're properly regulated, they can play a very positive role. And then comes the stable coins that are less stable, in other words, they're not really backed much, and the crypto assets like Bitcoin. And their time has passed to have regulatory frameworks that are as much as possible harmonized around the world. And I do hope that what we now see, that there may be more attention to this topic, translates into appropriate policy action.
I hope so too. Kristalina and Gita, I'm afraid we're out of time. I know both of you have hard outs, so I'm going to let you go. But thank you very much for joining us and for having such a wide-ranging discussion.
Thank you.
Thank you.
That was Gita Gopinath there and Kristalina Georgieva of the IMF. It was great to have them both on. Remember, Foreign Policy now has dozens of articles examining the global economy and Putin's war on Ukraine on our website, foreignpolicy.com. With an insider subscription, you can also take a look at our special reports. There's one on stablecoins as well, which you just heard about. And if you liked this discussion, take a look at our forthcoming FP Live interviews, as well as our partner events on foreignpolicy.com/events. Just this week, we have a climate talk on public and private approaches to achieving a zero carbon electricity mix. That's on Wednesday. On Thursday, FP will partner with the International Foundation for Electoral Systems as we explore how to fight corruption and prevent authoritarian tendencies. Stay tuned for all of that. For now, I'm Ravi